Pause 1S. Welcome to our channel, where we break down complex economic data into understandable insights. Pause 1S. In today's video, we'll be focusing on April's Consumer Price Index, or CPI. Pause 2S. With inflation trends and their impact on the market taking center stage, it's crucial to stay informed. Pause 2S. This is April's CPI analysis, inflation trends and market moves. Pause 1S. Let's dive in. Pause 2S. Pause 1S. Before we dive into the details, let's set the stage with a high-quality animation that encapsulates the theme of today's analysis. Our journey through April's CPI data is not just a look at numbers, but a deep dive into the forces shaping our economic landscape. This animation serves as a visual prelude to the insights and information we'll be exploring. So sit back, relax, and get ready to embark on an enlightening economic adventure. Let's get started. Welcome to the Economic Odyssey, a journey through the intricate web of financial indicators that shape our world. In this video, we'll unravel the mysteries behind the numbers, from inflation rates to retail sales and the Federal Reserve's pivotal decisions. Whether you're an investor seeking insight or simply curious about the forces driving our economy, this exploration is designed for you. Get ready to dive deep into the data, decode market trends, and uncover the opportunities and risks that lie ahead. Let's embark on this economic adventure together. Welcome to our exploration of economic indicators, pivotal tools for understanding the complex world of finance. These figures provide glimpses into the health of the economy, offering valuable insight for policymakers, businesses, and investors alike. Among the most closely watched indicators are inflation, retail sales, and the Federal Reserve's monetary policy decisions. Each plays a crucial role in shaping market trends and influencing investment strategies. By carefully analyzing these indicators, we gain a deeper understanding of the forces driving economic growth, potential risks, and opportunities for investment. The interplay between inflation, consumer spending, and the Federal Reserve's response creates a dynamic environment that demands careful attention. For the average viewer or investor, deciphering these economic tea leaves can be daunting, but it is essential for making informed financial decisions. In the following sections, we'll delve into the latest economic data, exploring the trends in inflation, retail sales, and the Federal Reserve's outlook. We'll also examine the market reactions to these developments, highlighting the potential implications for investors. By understanding these interconnected factors, we can better navigate the complexities of the financial landscape and position ourselves for success. Now, let's focus on the Consumer Price Index, or CPI, a key measure of inflation that tracks the average change in prices paid by urban consumers for a basket of goods and services. In April 2024, the CPI rose by, indicating. This headline number reflects the overall price pressures faced by consumers, encompassing everything from food and energy to housing and healthcare. However, the CPI can be influenced by volatile components like energy prices, which may not accurately reflect underlying inflationary trends. To gain a clearer picture, economists often focus on core inflation, which excludes these volatile items. By understanding both the headline CPI and core inflation, we can better assess the true extent of price pressures in the economy. Diving deeper, let's examine core inflation, which excludes volatile food and energy prices, providing a more stable measure of underlying inflationary trends. In April 2024, core CPI increased by, suggesting. This figure is closely watched by the Federal Reserve, as it provides a clearer signal of long-term inflation expectations. If core inflation remains elevated, it could signal that price pressures are becoming more entrenched in the economy. This could lead the Federal Reserve to maintain its hawkish stance, keeping interest rates higher for longer to combat inflation. Conversely, if core inflation moderates, it could provide the Fed with more flexibility to adjust its monetary policy. Section 4. Retail sales, gauging consumer confidence. Retail sales data offer insights into consumer spending patterns, a key driver of economic growth. In April 2024, retail sales indicating. This figure reflects consumer confidence and their willingness to spend, which can be influenced by factors like inflation, job security, and interest rates. Strong retail sales figures suggest a healthy economy with robust consumer demand. Conversely, weak retail sales can signal economic uncertainty and a reluctance to spend. By monitoring retail sales data, we can gain a better understanding of consumer behavior and its potential impact on overall economic growth. Section 5. The Federal Reserve's Balancing Act. The Federal Reserve plays a crucial role in managing inflation and supporting economic growth. The central bank's monetary policy decisions, such as adjusting interest rates, directly impact borrowing costs, investment, and overall economic activity. In light of the latest CPI and retail sales data, the Federal Reserve faces a delicate balancing act. On one hand, persistent inflation pressures may warrant continued interest rate hikes to cool down the economy and bring inflation under control. On the other hand, slowing retail sales could signal a weakening economy, potentially requiring a more cautious approach to avoid tipping the economy into a recession. The Federal Reserve's policy decisions in the coming months will be crucial for navigating this complex economic landscape. Section 6. Market reactions, navigating uncertainty. Financial markets are constantly reacting to economic data and policy announcements. The latest CPI and retail sales figures, along with the Federal Reserve's outlook, have created a climate of uncertainty for investors. Stock markets may experience volatility as investors digest the implications of these developments, while bond yields could fluctuate based on expectations for future interest rate hikes. In times of economic uncertainty, it is crucial for investors to maintain a long-term perspective and avoid making impulsive decisions based on short-term market fluctuations. Diversification, careful risk management, and a focus on fundamentally sound investments can help navigate these uncertain waters. By staying informed about economic trends and policy decisions, investors can make more informed choices and position themselves for long-term success. Section 7. Conclusion: Connecting the dots. The latest economic data paints a complex picture of the current economic landscape. Inflation remains a concern, although core inflation may be showing signs of moderation. Retail sales indicate a slowdown in consumer spending, potentially reflecting economic uncertainty. The Federal Reserve faces a delicate balancing act, needing to address inflation without derailing economic growth. For the average viewer or investor, understanding these interconnected factors is crucial for making informed financial decisions. By staying informed about economic trends, policy decisions, and market reactions, individuals can navigate this complex environment and position themselves for success. As the economic landscape continues to evolve, staying vigilant and adapting to changing circumstances will be essential for achieving financial goals.